Good afternoon, Campbell McCrary here, Amvest Capital, live from New York City. Welcome to Amvest Capital Inc. live webinar with Ero Copper Corp. Ero trades on the TSX and the NYSE as ERO. Hope you'll enjoy today's program. It will be available in on-demand replay about an hour and a half after we wrap up. Amvest, of course, the New York-based specialist investment management and corporate finance firm focused solely on the natural resource space. And very important, this call is most definitely for informational purposes only. A few housekeeping notes. Ask questions of management. That's the box that's highlighted right now. Here are important links and downloads. You can get a copy of the presentation and links to their stock charts, etc. And you can share this event live right now on Twitter and replay while Twitter and LinkedIn while this is going on, or email it to a friend. Hope you'll do that. And over here, you can share your feedback. Please do that at the very end. You can only do it once. With that, bringing this over to David Strang, CEO and Director of Ero Copper. He founded it in 2016. Previous firms that he's been involved with include Lumina Copper, Lumina Royalty, Global Copper Corp, Lumina Resources, Regulito Copper, and Northern Peru Copper. And he was instrumental in the successful sale and monetization of each of these companies over roughly a 15-year period. Corporate and asset valuation is his specialty. So welcome to Amvest World, David. And why don't you tell us about Ero from the beginning?
Well, thanks, Campbell, and
thank you.
Thanks everybody for joining us today and to hear the Ero story. As Campbell mentioned, a company that, while a young company with respect to its Canadian and public markets basis, is a company that's over a 40-year life in Brazil, and I'll talk about that briefly in a moment. Some of you, I understand on the call, know me and know of the company. But if you are on the call with respect to that, please bear with us. Many people do not have a background knowledge of the company, so we will keep the presentation fairly high level as an introduction to those people. If you do continue to find the company of interest, please reach out to either myself or Courtney Lynn, our head of corporate development, even Makov DeFilippo, our president of the company, for any further more detailed questions you might have. And I do understand at the end of the call, we'll be having a question and answer period, and more than happy to answer any more detailed questions that people might have above and beyond that. So let's kick off with the presentation and give you the introduction. As Campbell highlighted with regards to Amvest and its disclaimers, please take your time if you can to read the disclaimers with respect to our presentation here today. But we'll jump right into this. So who is Ero Copper? Ero Copper is a high-margin, growth-orientated copper producer. We own 3 assets in Brazil. Our core asset is the MCSA Mining Complex in Bahia province. We also have the Annex Gold Mine in Mato Grosso province of Brazil. And then the Boa Esperança development project, of which we just released a news release with regards to the completion of the feasibility study on Boa, and a project that we're looking to put into production in 2022. As I mentioned at the outset with regards to this presentation, while Ero is a young company in terms of its public markets, MCSA Mineração Caraíba, the company we acquired in Brazil, has had a life of over 40 years in Brazil. It was a company that was started by the Brazilian junta government in the 1970s as the strategic source for copper for the country. It was privatized in the 1990s and acquired by people who did not have a background in mining, and essentially ran the company for the following 24 years as a personal piggy bank, in and above their core businesses that they had elsewhere. Unfortunately, the company ran into hard times in the mid-2000s and 10s with respect to the shareholders over-leveraging the company. And the unfortunate thing for those shareholders came the opportunity for us. And in acquiring the company in 2016, we have gone from strength to strength. As you can see on the left-hand side, We acquired the company. It was producing approximately 20,000 tons of copper per year. Happy to say, as of today, we are now producing double that production. And as we expect in the next 4 years, that we will be doubling our production again. And this has been a fantastic growth opportunity and a growth story for us, and one that I'm really excited to share with you today. Just a couple of key highlights. We have industry-leading returns in terms of return on invested capital, and you'll hear me speak about that a lot on this call. And our organic growth and the growth performance is driven by very, very strong exploration focus. So let's move on into some of the core values that we as a management team have as we continue to operate and run this company. As I said, we have 5 tenets. The first being we are a return on invested focused management team. That means returns on invested capital are extremely important to us and forms the core of everything that we do as we invest and continue to grow our company. We do that by maintaining discipline as being a first quartile cash cost producer in the copper space. We also do that through our significant organic growth potential with regards to our portfolio. We have large land positions in and around our assets. They are highly prospective, and we'll talk about that briefly later. We also have industry-leading low capital intensity that is driven partly by the fact that we have excess mill capacity at both our mining operations from which we mine today, thereby allowing us to continue to increase production at low, as I said, capital intensity, therefore driving high returns on invested capital. And we wrap all of this, our core values in terms of our growth, in terms of how we operate, in a very strong ESG culture and performance. And we'll talk about that briefly at the end of the presentation as well. So let's dive in a little deeper into our portfolio. As I mentioned, the MCSA Mining Complex in Bahia is our flagship operation. It is a very high-grade, low-cost operation generating strong cash flows. We are typically mining grades in excess of 1.75%. Copper is generally our head grade. This year we are higher than that, over 2%. We're currently in our life of mine plan, as per our 43-101 technical report, have a life of mine plan between 42 and 50,000 tons a year of copper production, averaging 97 cents a pound over that lifespan. We've got a strong track record of mine expansion and operational improvements, and we'll share some of that with you. And as I mentioned previously, significant growth potential, not only in the fact that we have the largest single asset exploration drill program ongoing in the world today, with over 24 drill rigs currently operating, but that also services into the fact that we still have 25% of our operating capacity in our mills available for growth. As I mentioned previously, the Boa Esperança project is a low capital intensity, high return, construction-ready copper project in Pará State. We released the feasibility study earlier this month, and that study currently shows a life of mine production of around about 35,000 tons a year of production over the first 5 years, around about 27,000 tons life of mine. But as you can see, the internal rate of return, i.e. return on invested capital, over 41%, is extremely high for new development projects around the world. And we feel very excited about that. To us, that is the base case in terms of opportunity here. One of the things, if you go and look at our detailed information in the news release around Boa, is the fact that we have this zone called the Gap Zone, which we are currently drilling, and that will significantly enhance the economics of this project even further than today, by the fact that this was a zone that was missed by the previous operators in terms of drilling. It is in our current pit shell, and therefore we'll be converting waste to ore. And we hope in the new year to have more information with regards to that as we move forward towards a construction of this project in the latter part of the first half of 2022. Last but certainly not least is our NX Gold Mine. This is a mine, it's one of the highest grade mines operating in Brazil today. Operating costs are some of the lowest in the industry, all-in sustaining costs of around about $720 an ounce. And again, strong growth potential here is, I like to call it the mini-me of MCSA. A lot of the same characteristics of opportunity to enhance value at MCSA exists for NX. A large land package, underexplored, excess mill capacity, and a fantastic operating team on the ground. So we really feel over the course of the next few years that we'll be significantly enhancing that asset as well in terms of production growth. But let's talk about coming back to our core values and giving you some data with regards to that. It's always easy to turn around and say, well, we've got high returns on invested capital. This graph shows that in graphical form. This is provided by Bloomberg, and trailing 12-month return on invested capital against our peer group. And as you can see, we are consistently generating significantly higher return on invested capital versus our peers. Why is that important to us? Well, management is a significant shareholder of this company. Like our investors, we are highly motivated by making high returns on the invested capital that we have invested in this company, and look forward to seeing that as we continue to go forward here. And that is driven by a track record of operational excellence and execution. On the left-hand side, you can see our consistent growth in EBITDA since acquiring the company. We acquired the company with a debt ratio of over three times. And as you can see, relative to the growth in EBITDA, so that debt ratio has decreased as well. And we continue to pay down debt as we have over the course of the last quarter. And that has dropped even significantly more. But as you can also see, we've also driven operational excellence by dropping our operating costs at this operation from $1.45 to where we are today, right now, year to date, around about 60 cents. Our guidance for the year is between 75 and 85 cents a pound. And I think we'll probably be in the lower half of that guidance range by the time the end of the year's ended, primarily due, like any other mining company and what you see in any business in the world, inflationary pressures are driving some of that with regards to increasing our costs there. But as I said, 75 cents a pound, still one of the lowest cost copper producers in the world. And as I said, strong organic growth pipeline, just merely responding and highlighting again on the first slide our growth. This is fundamental to us. We feel that we can continue to generate strong organic growth through our exploration program and discovery program that we're doing. And as you can see, historically, we've been able to show it. We are now moving to put that in place for up to 2025 with the construction of Boa. And we still see plenty of runway left within our portfolio to continue that growth on the going forward basis. And as I said, that growth at the moment with Boa is generated out of Boa offering the highest after-tax IRR in the business for an undeveloped project, with also the lowest capital intensity. So filling in with our core values of how we like to grow and how we like to work as a company. High returns on capital generated by low capital intensity. And low capital intensity also works to lower risk in terms of construction of these types of projects. And so we're really excited about Boa and its prospects for us. It provides us with a nice cornerstone in the Caraíba copper district, particularly in the western side of that, which is starting to be emerging as a new copper district in Brazil. We have a nice land position there, and we're already seeing other opportunities in the area for us to look at growing our portfolio there organically as we move forward over the next few years. But as I said, there's attractive, somebody is moving my screen forward, my apologies. But attractive upside across our portfolio. As I said, the organic growth initiatives that we have, not only with regards to the construction of Boa, but also within our existing portfolio. As I said earlier, MCSA, one of the big projects we're doing there is what we call the Deepening Extension Project. If you have followed our company or if you look at some of our news releases that we've put out, we've made very significant discoveries at the existing Pilar mine in what we call the Deepening Extension Project. And I'll highlight a couple of drill results later, but the highlight there being a 67-meter hole of 9 over 9% contained copper. Just an outstanding opportunity with regards to the deepening project, and one where we still have not figured out the limits of this. And so we really look forward over the course of the next couple of years of continuing to drill out the deepening extension project at our core Pilar mine, and really looking to work towards increasing our production and utilizing that excess mill capacity that we have at our plant there. I've spoken about Boa. Boa is a tangible growth asset right now. But as I said previously, we have opportunity with exploration within the gap zone, and also our cornerstone position in the western part of the Caraíba copper belt. And we see that being another asset that will be growing over the future as well. NX Gold, as I said previously, we've got a very robust exploration program there. We've recently made a new discovery called the Matinha vein, and we're also looking at other regional targets, but we really feel Matinha, over the course of the next 12 to 18 months, as we continue to drill it, may become the catalyst for us to be able to use the vast majority of that excess mill capacity at NX. Still very early days, still a lot of work to be done there, but certainly it is starting to show results that would suggest that we need to spend more time on it and start looking at the potential to add it to our portfolio. And as I said, organic growth is a cornerstone of how our company will grow. Ero has been able to add significant value to its portfolio through aggressive exploration of our existing assets. And one of the key aspects that I liked about acquiring this company was the fact that the assets had been underexplored by the previous owners. They didn't have mining experience or exploration experience, and I felt there was a lot of the skill sets that we had as a company that we could bring to bear with regards to exploration. And we've already seen significant upside and returns on that exploration work. When we acquired the company, we had limited reserve life at the MCSA Mining Complex. There were actually no mineral reserves left at NX Gold. And the annual exploration budget was $1 million for a land package that is twice the size of the Sudbury district in Canada. Now, why did I raise Sudbury? Well, many of you may know Sudbury as what we call a magmatic sulfide district. It's really one of the cornerstones of which Canada was built upon, is the huge value that was generated there. Well, we have a magmatic sulfide district here in Brazil. As I said, it's 130 kilometers in length, about 90 miles from north to south in terms of the land package we control, and around about 20 miles or 30 kilometers on an east-west direction, and very underexplored. We are really the first people to really look at this district in any great detail, and I'm happy to say we are having great success in a lot of our work. Probably not as quick as we would all like, as after all, it is exploration, but we've already seen tangible results. We've already increased our mine life and reserves to over 13 years at the MCSA Mining Complex, and that will continue to grow. We've added 6 years of reserve life to NX Gold from 0 when we acquired it. And as I said, a very robust, aggressive exploration program that we will continue to utilize to continue to grow our company. I'm very, very excited about that. As I mentioned, world-class results that we're generating. This is a slide that our team put together. What it encompasses is drill results from mining companies around the world over the last 3 years. And just to kind of put the perspective of how the quality of what we're discovering in the Curaçá Valley or the MCSA Mining Complex compares to other drilling by other mining companies around the world. We have approximately 30% of the top 50 copper mine drill results are attributable to the MCSA Mining Complex in the world that have been drilled over the last 3 years, highlighted, as I said previously, by the 67-meter hole at 9% copper that we drilled earlier this year. And I dare say there's going to be more to come. It is a fantastic mineral district. I think it's going to become one of the world-class magmatic sulfide districts once we're all said and done. I dare say they'll be mining here and exploring here long after I'm gone. And so we're just happy to be great stewards of a great mining district for the next few years as we continue to grow our company and uncover the riches in the Curaçá Valley. But while we do that, and many people, you can put all sorts of things around our ESG components. I think the most important one and relevant one is how much CO2 you're producing per ton of copper. And that really speaks to our carbon footprint in the world. Happy to say, in terms of the companies that release their information with regards to their carbon footprint, you can see we are the lowest in the world. We benefit from the fact that a lot of our power comes from hydroelectric power, but we're also very, very efficient in the utilization of our water and recycling. Almost 90% of the water that we use is recycled. We have some innovative ways that we do tailings disposal that allows us to recover a significant amount of water. But I think this just is symptomatic of an industry, as we continue to move forward, that has to be in lockstep with regards to where the greening of the world, and copper is going to be a significant portion of the new green economy. And as stewards of production of copper in the world, so we need to be lockstep with that as well. And happy to say that this metric now is just a starting off point for us, and we will continue to work towards increasing that as we go forward. So, just in general summary, we're executing on our strategic plan. Boa Esperança, the project that we announced, and earlier this year, if some of you may have known, I said by the end of 2021, we wanted to be able to show the market a framework for us to be able to double our production over the next 4 years. I'm happy to say that Boa fits that, and we're excited about the prospects of building Boa over the course of the next couple of years. And it provides us with a cornerstone position in the emerging Caraíba copper belt. The construction of the deepening project shaft is underway, and it's going to access a world-class high-grade copper reserves and resources, and that ore body remains open to depth. We still, above and beyond that, have significant excess mill capacity at both MCSA and NX Gold that will provide us low capital intensity growth in the future, and we're going to be able to deliver that growth through our organic exploration program with regards to delineating new resources at MCSA, at NX Gold, and at Boa. As I said, one of the largest ongoing exploration programs in the world today. Just a little bit on our corporate and capital structure. We have just over 88 million shares outstanding, 95 million fully diluted. As of the end of the June quarter, we had $238 million of cash, and our debt was around about 159 million. Our largest shareholders, particularly institutions, we're proud to say that to have T. Rowe Price, Fidelity, and BlackRock as our 3 largest institutional shareholders. And as you can also see, management team within the C-suite, myself, my business partner, Noel Dunn, and my other business partner, Mike Richard, who's our head geo, have significant share positions in the company. And so we are firmly aligned with our shareholders in terms of growing the company. I just want to bring this back up. It just comes back to our investment philosophy, our core values. You've seen that at the beginning of the presentation. Hopefully, as we've gone through it, we've been able to show how we achieve these, how our growth, how our operations, how we conduct ourselves with regards to ESG are highlighted in our core values and our investment philosophy in these 5 tenets that we have in terms of operating this company. And I'm just going to leave you with our last slide, which is our 2021 guidance. Production, 42 to 45,000 tons of copper per year. We're guiding towards the higher end of that range. NX Gold, guiding again to the high end of the range there. Operating costs, 75 to 85 cents a pound. As I said, guiding towards the lower end of that range right now, as well as NX Gold, even though we're in a highly inflationary environment right now in the second half of the year. Capital expenditures for the year in line, exploration budget in line. And so with that, Campbell and Adam, I'll pass it back to both of you for some closing remarks, and we can move on to any questions that people might have.
Right. So we have some questions that have been sent in, and I'll address those, pass it over to Adam for a bit, and then wrap up with the remaining questions, and we'll be done in, around 5 or so. So could you go over the details of BOA construction and capital costs?
Happy to. With regards to BOA, we will be building BOA over the course of the next 2 years, starting in the middle of next year. Capital costs on the project, I'm just going to check my notes here. Yeah, that's right. My apologies, is approximately $300 million to build the project. And as I said, construction starting around mid-year next year, 2-year build, and then first year production will be 2024. The second half of that year, first approximately 27,000 tons. And the second half of 2024-25, approximately 50,000 tons of copper.
What is the break-even price of copper for BOA? Will BOA have a mill, or does it exist?
BOA will be a brand new mill that we'll be constructing there. The BOA mill will be one that is well known. We are using Ausenco as our lead engineers in terms of the design and construction of this. If people know the industry and followed it, they just recently completed construction of the Carapitina mill in Australia, exactly the same size mill. And they also designed a recently completed mine and mill in Brazil called Serrote. Our break even with regards to this, our C1 costs around about $1.20 a pound.
All right. Can you speak to Brazil's tax and royalty structure?
Happy to. Federal taxation in Brazil right now is around about 15% on the federal tax basis, and there is a government royalty in place right now of around about 2%. Now, there is talk and there is a bill passing through the Senate that will change that dynamic slightly for the mining industry, in which we will now be moving probably to a higher royalty, but that will be offset by a lower federal tax rate for certain certain commodities within the mining industry. The reason they're doing that is allows the mining ministry greater access to some of the taxation than it going into general account. And so that's what's happening in the moment. So you may see a swapping of the federal and royalty basis. Essentially, what is happening is it is moving to a net zero impact with regards to the industry, but more a realigning of how taxation is paid by mining companies in Brazil.
Could you see Ero looking to transition to electric vehicle equipment, EV equipment?
All right, so let's talk about that. As a core producer of copper, and many people do realize that copper is the lifeblood and essentially the veins of the green economy. You cannot have a green economy without copper in it. Now, within our portfolio, there are potential opportunities, and we've talked about this briefly, albeit we're still exploring for it. Within magmatic sulfide deposits, there are opportunities to discover both nickel and platinum group metals. We have put out news with regards to some work that we've done on platinum group metals, as well as some results relating to nickel. I think we're still at very much the early stages with regards to the discovery of those particular commodities. Both are very important within the battery metals environment and or the green economy. But I think it's very much from our perspective right now, watch this space. We are certainly motivated to find additional sources of both of those commodities, but as it stands right now, our core work is related to continuing to discover copper in our district.
Can you produce the targeted copper without exploration and results?
Well, that targeted copper right now that we have released in terms of our life of mine plan and the BOA project is just what we know today. If people have followed our company, they will have seen that we consistently have increased our reserves and resources on an annualized basis year on year, and we anticipate doing that again this year. So that growth is not included in our life of mine production. And so the numbers we showed today do not include the hopeful exploration in the future. It's rather reserves and resources that are delineated now.
Great, thank you. Now I'm going to pass it back to Adam Graff, also in New York with me, and he's going to dig in. Adam?
Thank you, Campbell. David, I think maybe the EV question was not so much what you guys are exploring for as much as are you guys looking to transition your underground equipment to electric vehicles in order to take advantage of your low power costs?
Well, one of the things about our business is we do have some of the lowest power costs in the world related to the fact that our power does come from hydroelectric. We do run diesel-operated equipment right now. We would love and would be one of the first to be able to transition as quickly as we could to more to battery-powered equipment. The most recent Mine Expo just finished up in Las Vegas. And as of yet, we're not in a position to be one where we could rely upon LHDs and some of the other equipment to be one that would work effectively right now in terms of day-to-day operations. So as it stands right now, there is a wish for us to transition. You know, above and beyond just the environmental side of things, there is a significant ventilation and cooling aspect to be able to move to all electric. And so we would love to be able to do that. I think we're probably 3 to 5 years away from technology that would allow us as a mid-tier producer to be comfortable and confident that we could do it. Certainly we have, and we're fortunate that some of the larger producers in the world on some of their non-core producing assets are experimenting and are starting to utilize that. And we hope to be able to benefit from the discoveries and the technology advances they make to be able to move as quickly as we can to all electric in our mine.
Fantastic. Question for you. As you guys look to continue your growth beyond Boa, are you focused solely on exploration on your own property, or are you looking beyond your current holdings to potential acquisitions? And if so, what are your criteria and preferences?
Like every company, we would be remiss to say that we haven't looked at other opportunities out there. But as a company that is focused on generating high returns on invested capital, we have to be able to see arbitrage in the marketplace for us to effectively do something for our shareholders. If you've looked at the 3 most recent transactions that have occurred, Sandfire's acquisition of MCSA, yesterday's announcement of Sibanye acquiring the Appian assets, and the third one just left my head a little bit there. We understand those processes, and we feel that those acquisitions were more generated towards a metal price play than at opportunities that we could see arbitrage. So we look at our opportunity, and we look at our expertise, and we try to understand what we're really, really good at. And I think one of the things we've been able to show the marketplace is our success in exploration and resource development. Certainly as the CEO of this company, and Adam, you know, and Campbell know, and some of the people on the call know my background in terms of resource development and the companies I've had an opportunity to work with over the last 20 years in that regard. So that is something very near and dear to my heart. Certainly Mike Richard and his team from the exploration side, bring an expertise to the table that is world class. And so as we continue to grow, we quietly, when we have opportunity to acquire, we'll acquire opportunities that we can bring our exploration talents to bear, as opposed to buying operating assets right now. Now, that doesn't say we wouldn't in the future, but we have to see arbitrage. And we just see a competitive advantage on the exploration side that we have versus other people. And so we certainly are relatively active in that space.
Maybe, no, I think that's, I think, that was pretty clear, David, where, you believe you can buy early staged assets and deliver high return by buying assets that are, that are not yet, priced up. So I think that's a fair strategy. And maybe continuing on that, how did you guys originally identify MCSA as an opportunity and make that acquisition?
Well, it goes all the way back to 2008 when I had an opportunity with some of my colleagues in the Lumina Group to potentially acquire the company. And we conducted due diligence on it. And unfortunately, we offered this, what we felt was a significant purchase price to the shareholders at that particular time of the company, and we were rebuffed with our offer. So I've known about the asset since 2008. And frankly, I got a call out of the blue in early 2016 from somebody I know in Brazil who knew about the asset to tell me that it run into financial difficulties and that the shareholders were motivated to potentially do a transaction. And so Noel and myself jumped on the plane, went down, evaluated it. Frankly, I thought the potential for the asset was better than what I saw in 2008. And we then spent 9 months negotiating with 9 separate Brazilian banks on a package that would allow us to acquire the company. So I'd like to say that we were, masterminds and things like that, but we fortunately received a phone call and we acted on it. Were you up against some competition, and you were able to beat them to the bid? What was there any competition? Luckily, we were able to keep it very quiet. The shareholders were highly motivated because the company had entered into bankruptcy, and in Brazil, bankruptcy rules are such that if you are a Brazilian equity owner of an asset and it declares bankruptcy, you are personally liable to the debtors. And so we were able to move very, very quickly and quietly on it. And you have to remember that particular time in Brazil, there was some turmoil within the government because the president at that time was being indicted. Brazil's financial situation was in dire straits, and the global copper price was on the way down and not on the way up. So I think we were able to take advantage of specific market conditions that were unique, that allowed us to potentially acquire it before anybody else could get it. And remember, the company didn't, if you looked at the company, you really had to take a strong view with regards to the exploration potential. And, I think with having somebody like Mike on our team and his expertise and seeing the opportunity in district gave Noel and I great confidence that there was a significant opportunity here, that perhaps maybe other companies who may have been shown it, and we certainly don't think anybody else was shown it, or few people were, gave us sort of a leg up at that particular time.
Are there any private royalties that are sitting on any of your assets, operating assets or BOA?
No, none of our core assets right now have any. Some of our acquisition land positions may have some private royalties associated with them. But as it stands today, nothing in our core operating position, no.
Can you talk, Dave, a little bit about capital structure? I know that when you took on the company, it was over-levered. You've brought down the debt, but right now you're net cash, but you're still holding, a fair amount of debt. Why not pay down some of that debt?
Well, talk to us in a couple of weeks when our financials come in.
Is that debt, yeah, what's the instrument that debt is sitting in?
So that is a revolver. So when we acquired the company, it was structured debt with 9 separate Brazilian banks. We then retired that debt with a structured facility provided by Scotia Bank and Bank of Montreal here in Canada. And they've been fantastic in terms of the debt structures we've had with them. And as the company has grown and as the company's financial situation has improved, so we've been able to continue to change that structure. And that structure has now moved to a revolver structure in terms of revolver debt. And so, that gives us much greater flexibility in how we finance and capitalize things. And as we go forward, I see Vic has asked a question on how we're going to be doing BOA. And BOA will be a combination. We haven't worked out the entire package yet, but as I've been known to be saying, we, as large shareholders of the company, are highly motivated with regards to capital structure. And I think with Noel's background, along with Courtney and Wayne, our CFO, having significant experience in the debt markets and in structured markets, I think you will see that return on invested capital and cost of capital are extremely important to us in terms of a management team. It goes back to that core principle of return on invested capital. And so as we go forward and as we look to finance the BOA project, that will come from a combination of cash flow. There will be, I'm sure, some debt associated with it. But as you look down capital structures and the cost of various types of financing, from revolvers to bond issuances to structured debt to cost of equity to hedging, et cetera, all of those have various costs associated with them. And what we like to be able to say is we're in a really, really good position as a company. Number one, we're one of the lowest cost producers in the world. Number two, we have a very, very good capital structure as it stands to date. And therefore, we have the ability and the opportunity to use the lowest forms of cost of capital for us to continue to move forward in terms of the growth of our company. And I think we've been able to show that in terms of how we've taken this company over the last 4 years to where it is today and how we intend to do that going forward.
David, following on that, what do you think about perhaps setting some floors on your copper for the next 3 years at considering current copper prices to ensure the cash flows you're going to need for BOA?
Yeah. And so when we look at that, there is a cost of capital associated with that. And if you look at the hedging market, and something that certainly we don't need to go in great detail, if you looked in the hedging market or the forward market for copper over the next 6 months, very, very active. You start going out over 12 months to 18 months to 2 years, becomes very inactive, and cost increases significantly in terms of trying to put those types of structures in place. And so when you look at it as a cost of capital basis and the way we look at things, hedging can be extremely expensive relative to other forms of capital that you may require. And hedging is a financing tool. And I think everybody should bear that in mind. And there's another component with regards to hedging, which is important. Investors invest in us because they believe in the management team, but they also believe in the copper market. And by hedging, we essentially are taking away an upside tool to our shareholders. Certainly, you look brilliant if the copper price decreases, and that cost of capital is relatively low. However, if copper price continues to increase, that cost of capital is extreme and can be seen to one of the most expensive forms of securing cash flows for your company. So you have to be extremely careful in terms of the use of hedging in our world. And a lot of that I've learned from Noel and Wayne in terms of how we think about this. And so that is important to us in terms of this. And that's why I keep coming back. Return on invested capital, cost of capital, we know it extremely well. We've got a very talented management team that understands intimately cost of capital. And so as we look forward, I think you will see from a company like us that hedging would be something that would be one of the last things we would do.
Mm-hmm. On perhaps a related subject, I know Brazil has seen some weakening of its currency over the last several years against the U.S. dollar. Has there been local inflation, and if so, how have you guys been able to manage that?
Yeah, like the rest of the world, inflation has come on like a bit of a freight train over the last 6 months within Brazil. And we're seeing nothing different than what we've seen in the rest of the world is experiencing, particularly in the mining industry. So we do have inflation that is hitting us. The question about it is what part of that is transitory and what part of that is structural. Certainly we have seen some of our wages that is probably more structural increasing. And we saw a 9% increase in wages for our new contract with our union for next year. But we also see some things within it as being transitory. Steel pricing, for instance, which is a significant consumable for a company like us. We saw that rise significantly mid-year, and now we're seeing that moderating significantly. But if you look at the cost structure of our company, power, which is one of the single most, counts for about 35% of our costs, is under 75% of that is under a long-term contract. And under that contract, our power cost right now is around about 15 cents reais, or about 2.7 cents a kilowatt hour in US dollars, making us that being a relatively low cost for us. Wages, obviously structural for us, and we do see some pressure in that. We can work with that over a period of time, but it's not something that we can address in the short term. And then you're into your consumables, your diesel, your steel, your cement, these types of costs that go into your day-to-day mining costs. And what you're seeing there is those are moving around. We are seeing diesel prices higher at the moment, obviously with oil price being up over close to $90. But we are seeing mitigation in steel prices. We are seeing mitigation in cement. So it's a bit of a roller coaster right now. I think we, as an industry and basically the world, looking what I'm seeing, we'll be in this bit of roller coaster through mid-2022 until we start seeing settling down of how shipping is moving around the world, et cetera, and back to normalcy, and we'll see those costs hopefully come down in that regard.
How are you managing the costs or the upfront capital costs for BOA, considering quite a bit of that is probably in steel and cement?
Correct. So our estimate for BOA was done at the height of the cost of with steel prices used mid-year, cement prices as of mid-year. So our costing right now is as now. And so as we move forward here, our expectation, we're reasonably comfortable right now that these costs are generally as high as we will see them. We can't look to the future, but certainly we're not building and looking to build this mine on the basis of 12-month-old or 18-month-old costs.
Mm-hmm. Very good. Let me throw it back to Campbell. I'd love to get learn more about your assets, but I think there might be some questions from the audience, and so let me throw it back to Campbell.
Right.
Sounds good.
So you talked to people, inquired about potential acquisitions. What about Ero's thoughts on merger of equals or being an acquiree? What's the framework as we should be seeing your company, and what perch do you occupy?
Right. Again, it comes down to, I keep coming back to this this comment, which is return on invested capital. Right now, when you're having metal prices as we see them today, I think everything is fully valued. So why would we consider a merger of equals? A merger of equals would suggest that there's something in our portfolio that we need to diversify away from. What some people have said, well, you're very focused in Brazil. We look at that from the standpoint of this, that our shareholders would build a diversified portfolio of assets that they'd want to invest in the copper space, and Brazil would be, a copper producer like us, would be part of that portfolio. So we feel that geographic diversification is not necessarily the core reason to do a merger of equals or something to that effect. We'd have to see something that would allow us to see significant returns to our shareholders above and beyond geographic diversification. There must be something in that portfolio that we would see that we could bring our skill set, i.e. our intellectual capital, to bear, that we could do a improved job or better job than the existing management team that's running that particular company. And I think, dare I say, I can't say every management team, but I think every management team does a really good job, a reasonable to really good job of managing their assets, particularly in these markets today. So we look at it and go, stay with what is core to you, use your intellectual capital, what you know you're very, very good at, and grow your business that way. And we feel that longer term is the best returns for our shareholders. We can never say that we wouldn't be an acquirer of other assets. We have certainly looked at the opportunities. We just don't see value right now that allows us to bring to bear our intellectual capital. Now, that's not to say we're not acquiring assets. We are. But those assets are such that, number one, we do not have to disclose them because of the size of those acquisitions and or transactions that we're doing. But number two, really allow us, and we see great opportunity, particularly in Brazil, of opportunities where we think our team's geological skill set can come to bear to really grow our business that way. We've got a lot on our plate right now. If you think about it, we are doubling. Tell us how many companies out there are looking to double production today, and we're using our own asset base to do that. I think our shareholders would like us to be focused on making sure that we bring these opportunities to bear and generate the returns they're seeking from us, as opposed to necessarily running around chasing squirrels everywhere we look. And so right now, as a company going to double its production while maintaining first quartile operating costs, I think is a great investment story for people and investors who are interested in investing in the copper space.
Might you be able to produce any other metals that could lower your net copper equivalent cost? Quotation.
Right. So we do.
That's sort of a policy question at the same time.
At MCSA, we do produce gold. We produce around about 10,000 ounces a year of gold production, and we do a little bit of silver as well. As I mentioned previously, we are hopeful as we continue to explore that nickel and or platinum group metals, PGMs, will become part of our portfolio. We have had some takers chat to us about potentially doing a deal in order to pay us for the PGMs. that do occur on occasion in our copper concentrates. But the terms so far, we just don't see value above and beyond the deals that we have in place with existing off-takers with regards to that. Now, that may change. And Mike and the team are really spending a bit of time trying to understand our platinum group metals and where they do occur and how they occur so that we can get a better handle on how we can get paid for them. From the nickel perspective, there's not a lot of work that has to go into the plant in order for us to produce a nickel concentrate. But right now, we're very much still in the discovery phase of that and trying to understand the nickel and the PGMs that we do find, and we have found it, of whether, number one, it's in economic amounts, and number two, can it be mined in such a way that we can make money out of it? And so, remember, up until 3 years ago, nobody thought there was nickel and PGMs in the district. So in 3 years, we're already at a point of trying to understand the potential value add to our company. And I would hope over the next 2 to 3 years that we are able to quantify that in such a way that we'll be able to add that to our portfolio of products that we produce.
All right. What is the exact end product coming out of the mills, and do you sell the product directly within Brazil or to the export market?
Great question. Great question. So MCSA, the copper that we produce is called copper concentrate. It is a product that we sell contains 35% copper. It's in powder form, and it gets sold to smelters. 50% of our production goes to a single smelter in Brazil, which is located about 300 kilometers or 200 miles from us down in Salvador. And the remaining 50% gets sold into the international market. Now, bearing in mind, prior to us acquiring the company, they had never sold any of this material internationally. And it's really quite an interesting thing that's starting to occur. We are starting to see that as our product is getting out into the world market, more and more companies are contacting us directly, smelter companies outside of the traders, asking us to do a transaction with us. So why would they do that with us? Well, we have what we call the Goldilocks concentrate. It's just perfect with regards to the amount of copper it contains and the amount of sulfur it contains. And it's the perfect product for smelters. The other thing about it is it contains no deleterious elements. We don't have any bad, nasty byproducts that goes into our concentrate. And so it's a fantastic con that can be used for blending. And so taking particularly arsenic levels down before they go into the smelters around the world. And so our product is receiving a premium in terms of the international market and the trade for it, and something that we hope to be able to continue to leverage as we go forward. With regards to NX Gold, we sell gold doré that contains both gold and silver.
Okay. We speak about cost per ton, dollars per ton in operations, and the trend, the development costs, an all-in basis per ton as a component. So a lot built in there. So
all right. So happy to try and deal with that. I don't have all my notes in front of me. I think Terence has asked this question with regards to that. So Terence, please bear with me. I may ask Mako and or Courtney to jump in because they have some of the numbers sitting in front of them. As I said, our all-in operating costs is around about, Mako, jump in here, around about $1.73 a pound. No, $1.50 a pound, I think. Is Mako on the line?
Look, still here, Dave. So, look, I think, what we, obviously you can calculate that from more MD&A. What we typically provide in all of our financial statements is the build up on a per ton basis of material mined and processed. And we provide that in local currency to remove the influence of FX rate. So just going here to, obviously in the second quarter this year, we were able to produce our C1 cash costs at 72 cents. If you're adding back sustained capital and everything else, you can prove at what that number is. Although we provide our CapEx reconciliation tables there. On a Brazilian reais per ton metric mined and processed, we typically operate in the area of about 100 to 130 reais per ton. That's Brazilian currency, about 50 reais per ton process, which is about $10 US. And then we have indirect costs on top of that, which is about 30 to 40 reais per ton. So a bit less than $10 per ton.
Hope that helps you, Terence, with regards to those numbers you were looking for.
One more question for me, just thoughts on dividends.
Yes.
Exactly.
As the third largest shareholder of the company, I like. We have to balance. We have to balance with regards to the company, the difference between issuing a dividend and or continue to grow the company as we go forward. And what is, again, the highest return to our shareholders? And so it is a ballet that needs to be played between those two competing choices. And so, as I said previously, as management is highly aligned with shareholders, I think ultimately we would all like to have a dividend at some point or some form of return in cash on the shares that we own. However, when you see opportunities that are generating excess returns, and as I said, the IRR on the Boa project of over 40%, the IRR of the deepening project of over 30%. These are returns that are so significant that we feel right now the best use of excess capital is to reinvest in the business and grow the business, particularly in an environment like we see today, where I think a lot of analysts are feeling that copper prices are more likely to continue to increase as this shortage continues to grow over the course of the next 4 to 5 years. I think we would like to be able to put the company in the best position possible to allow our shareholders at that particular time to get the highest returns possible. And so it's a long answer to a short question. Yes, ultimately, you have to look to pay a dividend. The question about that is when and how. And right now, as I said, as a management team, we feel the best use of our excess capital is to continue to grow the company and in order to make a dividend down the road even stronger.
Okay. Thank you very much. Got to pass it on to Adam to wrap up our Q&A, and then we'll pass it back to you, Dave, to close us.
Great.
Adam, you're muted. I think we're done with Q&A. Dave, thank you very much for the presentation. I'd sure like to get a technical presentation at another time. Maybe we can set up another webinar for folks that are interested in that. But I'll throw it back to you, Dave, to maybe just give us the upcoming catalysts and why folks should buy Ero.
Well, absolutely, and we'd love to host that, and I'd love to be able to get Mike and Pablo on the phone, who is our chief geologist, and Mike being a C-suite from that, to be able to provide some of the cool exploration work that we're doing. And we could certainly also add in Anthea Beth, our COO, who's doing some fantastic work with regards to the innovation she's bringing to the table with regards to some of the construction work we're doing and some of the projects that we have. So certainly love to be able to do that with you guys, and I'm sure there's audience members who would love to spend some time with that part of our team and learn more about that part of our business. With regards to catalysts right now, I think what you're seeing here is a company that continues to build a reputation on one that is focused on continuing to make returns and excess returns for its shareholders. So our catalysts in the longer term are going to be the construction of Boa. And people can run the numbers with regards to what that EBITDA and the multiple will be once Boa is constructed, and we see significant potential for growth in our share price there. And the near-term catalyst is we put out every quarter, 6 weeks, generally 6 weeks after the end of the quarter, a quarterly exploration update, and that provides day-to-day return or information with regards to the success of our exploration program and how we continue to add value on a day-to-day basis with regards to the company. And as I said, we continue to put out some spectacular drill results with regards to the deepening project, and be on the lookout for more information as we continue forward on some of our regional work that we're doing. You know, with regards to that, other catalysts as you move forward here will be the obvious publishing of the BOA technical report in the next month. We will be having our end of the year reserve and resource update, and then we'll be putting out our first 5-year plan beginning of next year, which really will provide that step function towards as BOA gets integrated into our production plan and provide the marketplace with a view of where this company is moving. We certainly feel that this is transitionary for a company like ourselves, being one to be producing close to 100,000 tons of copper per year, certainly puts us in the lower levels of the big boy leagues. We're still a low player, but you know, we keep on fighting and we keep working forward. I'd just like to thank everybody who's spent the time listening to this presentation. We are very open as a company. Please feel free to reach out to our investor relations team, and happy to provide additional information on our company. And also, please do go to our website, www.erocopper.com, to find out some more information on it. We have some kind of cool technologies with regards to a platform called Verify that allows you to look at a lot of our projects in 3D and be able to get a much better understanding of where we are and how we operate as a company. So thank you, everybody. Thank you, Campbell. Thank you, Adam. Appreciate the time that you've given us today.
Thank you very much. NYSE ERO. Congratulations on the U.S. listing. Good night, everyone.
Thank you.